Hi, everyone. Welcome to our first legal AMA with Sahil Verma. Thank you very much for being here. Let's get right into it. We want to help our analysts get more legal expertise, right, in how to understand what projects do well or badly and how to see red flags. And I want to start straight away with an example project that was quite highly rated, a game that was highly rated on our platform. But for me, I went in and just in a couple of minutes, I basically had to dismiss the project because I didn't think it was legally tenable. So I would like to show this to you, Sahil, quickly. And then you can hopefully explain to us if I'm right or wrong. And then we can take it from there. There we go. So as you can see here, we have quite good ratings in general, 3, 4, 4, and so on for the project. But when I went in, what I basically was looking for immediately is I just scan the project, I scroll down, and then I see one of the first things that is irritating me already is that they are selling the token on their website immediately. And that for me is a flag because you're not supposed to sell tokens, at least not security tokens, to the public directly. So that would be an orange or kind of at least one red flag for me. And then as I scrolled lower, I saw a much bigger flag. Here they show how many times, how much returns you will make if this project gets to similar sizes as other projects. And this to me makes it 100% a security token. And therefore, it's really illegal because you're not allowed to sell security tokens to the public unless you have a license for that. So the way I see it, this project, if it would get banned, it would basically get fined so badly by the SEC that it would probably go out of business. So here's my question to you. Am I right in being so harsh about it? What is the reality?
Honestly, Mark, first of all, you are right in the extent that a security token is heavily regulated, not just in the US, but in all the jurisdictions, even if we are talking about Singapore, Thailand, whatever country, even the UK, because security tokens would fall under the regime of securities and thereby bringing the market regulator into picture. So that is one thing. You are absolutely right there. Now, as far as the nature of this particular token is concerned, it will depend on white paper as well. That said, however, let me clarify it. A lot of times I've noted the founders claiming that it is a utility token. It is a utility token. Firstly, they don't clarify that it is utility token under laws of which jurisdiction. Secondly, in the US, 95 to 98% of utility tokens will always be considered as security tokens because of Howey test. Fortunately, other jurisdictions have not yet started implementing Howey test, and they have got their own criteria for determining a token to be security token or utility token. But US, the criteria laid down by Howey test is very vague. This particular token, in my opinion, would definitely fall as a security, would definitely be considered as a security under the laws of the US. However, it may be possible that if they have structured their white paper in such a way, it may or may not qualify as a security token in, let's say, Singapore or Malaysia. But there we can see there would be a different legal regime. For instance, in Singapore, it would be covered by the Payment Systems Act, PSA, which was enacted in 2021, came into force last year.
So if I'm an analyst and I'm on here, as I said, me personally, at this point, I dismissed the project and I gave it 1 star because I believe it's not legally tenable. Are there other things that I would now have to do to make sure of that assessment? For example, I should click on the white paper, right?
Absolutely. See, white paper review is very essential in order to understand the tokenomics, in order to understand the functioning of the token, that what exactly the token is doing. Even if a particular project or founders are claiming the token to be utility token, what is the utility coming up with it? What exactly is the use case scenario for the token? So, most of the times, Mark, if you notice, they'll write that, okay, you would be able to use this token, which we are launching on our platform, which is to be launched. But in what way the token would be launched? Or in what way the token would be used? Their white papers would be majorly silent about it, and that to me would be a red flag.
Okay. So I need to go through this white paper and understand exactly how the token is launched.
And under what laws are they offering the tokens?
Yeah, so I think I made my judgment very quickly, because I understand this Howey test, right? Which for me, the definition is it's a security if it's sold to someone with the expectation of its value increasing without effort of their own, right? That's a paraphrasing of the Howey test, I think. And that's why I thought if they make you expect that the price will increase, well, and you're not doing anything on your own, then that will be a security.
Absolutely, Mark. Going by the Howey test, and you have correctly paraphrased Howey test in succinct commercial term. So I like the definition for your criteria rather than going into all that technical or language such as it should be common enterprise, etc., etc. You have nailed it.
I would like to just understand that a little bit. So even if, let's say, they are incorporated in Singapore, and even let's say it was okay in Singapore, if they sell any, the way I understand it, if they sell any tokens to any Americans, they would still fall under the jurisdiction of the US SEC. And the US could impact the project by, for example, not allowing the game to be played in the US and things like that. Is that true?
Absolutely. This is correct. It's because when it comes to securities, the regulators in various jurisdictions, they have their own criteria. You can launch a token from Singapore and you can mention that, okay, anyone can buy it because this token is not a security in Singapore. But in a particular jurisdiction, if it is being considered as a security, or there are chances of it being considered as a security, then founders need to treat very cautiously. For example, in the US, they should be employing either a broker dealer, which is registered with SEC, or they should be applying to the SEC.
Okay.
Or Reg D filing or Reg S filings, they should be doing one of those filings to ensure that tomorrow they don't end up bearing the brunt of SEC. By they, I don't necessarily mean the founders, but the other investors. Let's say in Singapore, they do a token sale of $2 million and they end up incurring a fine of $2 million in the US. So whatever was the monies invested by Singaporean investors, that will go down the drain.
Yeah. Okay. No, very good. Yeah. Does anyone else have a question about this in the meantime, or anything to add?
I just want to point out that comparison at the bottom is a moon sheet, if maybe you're not familiar with that term. And it's very common for any pre-sale or IDO public sale to give a moon sheet. And to me, I guess, yeah, it does imply some expectations of earnings, but I don't think it's much different than when a project, we'll just say a project at this point, maybe does a very nice calculation based on the average revenue per user or something else that allows investors to speculate between the lines what the token price would be, right? To me, it's a watered down, dumb way to, hey, here's 3 or 4 people that we might be like, and if we did get to that size, like market cap of, this person, you could speculate what the token would be. So I don't know, that's very common. There's this mentality, right, that everybody else is doing it, so I can get away with it, right? I don't really know. I am a little mixed on that offer to buy on their website. That's I see it as failing the Howey test as well, like cut and dry. But a lot of these sites, if you actually clicked on that, I didn't try to do the sale, but when you click on them, they'll also, and so you can talk to the degree what protection this might provide, but they don't do true diligence and KYC. They just have a checkbox that says, oh, I checked that I'm not a US citizen or from one of these other jurisdictions. And I don't know if that provides any protection or not. Is that little layer where you check that you want to buy and you just go, yeah, I'm not a US citizen, is that good enough? Does that cover their proverbial ASS?
This was gray area, Daniel, and you have pointed out a very interesting thing here. This was something which was being used and is still used by a lot of token offerings. And unfortunately, this is not a foolproof way because US laws and laws of own jurisdiction as well would expect you to be reasonable and rational. Just because someone is clicking on the box that, okay, I'm not a US citizen, does not necessarily mean that fellow is not a US citizen. You always put those disclaimers, and you cannot rely that I had put the disclaimer, but this fellow still came. You are supposed to conduct KYC and AML. And KYC and AML not just for the purpose of it being security. In most of the jurisdictions, and I'll take example of Singapore here, token sales, if they are utility tokens, they would fall under the purview of consumer protection laws. So which means that consumers, even if they are not protected as investors, they will get protection under consumer protection laws. So these particular provisions, in short, mentioning that consumer protection laws of jurisdiction would not apply, or stating that I'm not a US citizen and we had put this checkbox, are not enough. The venture or the token issuer must do reasonable checks. Reasonable checks in the sense they must verify that the person who is actually buying the tokens is not a US national, is not a US citizen, or for that matter, not even a US resident. These things they should be verifying. One of the analogies or one of the nearest examples, Daniel and Mark, here would be investment funds. When investment funds offer their interests to accredited investors in the US, they are required to obtain a proof that particular investor is actually an accredited investor. Similarly, the token issuer must verify that the buyer is not a US national or a US citizen. They usually put a term that, okay, US nationals and citizens, they are not allowed, they are not eligible to buy tokens. But if they are putting that, then the onus is on them to implement this restriction as well.
So actually, I think what is very interesting to know is what kind of penalties can these projects and founders expect? Because what Dan mentioned a little bit is that people say, everyone is doing it, I can do it too. And probably if something happens, it cannot be that bad, right? But do you have some examples of what has happened to projects, or what can they expect when they badly misbehave in these ways?
See, generally, as Daniel pointed out, there is a tendency amongst founders and projects that, okay, everyone is doing it, so I'll also do it. It's like you are jumping a signal on a traffic light and you expect that there are 4 other cars or 4 other vehicles which ended up jumping it and they were not penalized, they were not even a ticket, so I will also not receive it. Unfortunately, you cannot use that as a defense in a court of law. And in worst case scenarios, Mark, what will happen is the project will shut down. Whatever are the monies, they will be taken over by the authorities. The authorities will liquidate and the authorities will distribute those monies to the investors. The founders can expect fines, which may range from a couple of $100,000s and can run into millions of dollars, plus some jail term. There are instances where founders themselves end up settling with the Securities and Exchange Commission in the US, for example, or the FCA in the UK.
Thank you very much. Dan?
I don't know how far we go down this rabbit hole, but I just want to point out some of what I know goes on in this industry. And I wonder, how far does a project really need to go with KYC? Because in the VC crowdfunding space, even though these guys try to do KYC, it's very common. And I've seen many times people are offering to sell you credentials so that you can KYC. So, and it really depends whether you're using Fractal or some other ones that do, face recognition and more advanced stuff. So I guess the question is, what level are you have to go to be confident that your KYC was good enough? The checkbox obviously is too flimsy, but is there a level that you're comfortable with that, when you see a project doing it? And then the second part would be, what do we do in terms of teams that are anonymous? And what can the SEC do in this space? Kind of a 2-part question. I'll let you spin it from there.
So when it comes to conducting due diligence, or when it comes to conducting KYC and AML checks, 2 things become very crucial. One thing is proof of identity, and second one is proof of address. Proof of identity is generally, let's say, passport or national ID, and proof of address is utility bill, bank statement, etc., etc. And again, the level of verification would depend on the nature of project, the nature of tokens, as well as the jurisdiction in which the token issuer is based. Let's say, for example, the token issuer is based out of BVI. Then conducting KYC or AML checks on databases such as RiskScreen or WorldCheck of Thomson Reuters. You can take a subscription and you are doing it. That would cover it if you are doing it in BVI. However, if you are a Singaporean entity, then you have to ensure that you are going beyond a second layer, which means Fractal or Onfido, that comes into picture. So this depends on the nature of project and the jurisdiction where the venture is actually incorporated. Yes, just to answer one of the other impending questions, which I guess would be on your mind is, let's say I provide Mark's passport copy and I provide Mark's proof of address to a token issuer in BVI. And token issuer and BVI conducts KYC on the basis of marked passport and marks proof of address and confirms it to be in order. So there have been certain instances where this thing happens, and unfortunately, those issues are still prevalent. And this is why you'll see that a lot of token issuers are coming up in these offshore jurisdictions rather than coming in mainstream jurisdictions. Does that answer your first part, Daniel, or do you want me to go into further details?
That definitely answered it. And then just, what your thoughts are on anonymous project teams.
Yeah, honestly, when it comes to anonymous projects, I'm not a big fan of them. It may be true that some of the anonymous projects are genuine, but majority of them would not be. The reason why projects remain anonymous is to ensure that founders or promoters or the creators of those projects, they are shielded from liabilities, or they can conduct scams or pull the curtains, whatever they want to do. These, in my opinion, are red flags when it comes to anonymous projects or anonymous ventures. A lot of times we have also seen that some of the anonymous projects, such as VTB DEX, which used to be HODL in past, they are claiming that, okay, we have got a foundation in Malta, but they'll never disclose who are the trustees, what is the governing process, etc., etc. That's another red flag. When they talk about decentralized autonomous organizations or saying that, okay, our project would be on DAO, it is completely anonymous. So if a project is completely anonymous and it's on DAO, then there should be a smart contract governing that particular DAO, because DAO by its own nature has to be decentralized and has to be autonomous. And because of these reasons or these issues of anonymity and investors and fellows losing money, some of the jurisdictions such as Wyoming in the US and Liechtenstein are coming up with legislation pertaining to DAOs in order to ensure that they are able to do it in a legally compliant way. Now, coming to your factor that if there is an anonymous project and people end up investing in it and they end up running with it, it becomes a very difficult process for law authorities to take actions against them. As you pointed out, sometimes money trail cannot be traced in wallets. You can create custodial wallets, non-custodial wallets, keep on moving funds. Sometimes it becomes easy to track. So if it becomes easy to track, then a Mareva injunction, that is asset freezing order, is usually passed. In that cases, we have seen instances of US courts issuing subpoenas and issuing notices by dropping NFTs to those particular wallets or by dropping a particular coin to that particular wallet. That's what they are trying to do. Law authorities are trying to catch up with it. And I'm sure that one day there would be much more stringent regulations wherein it will become difficult for anonymous projects to hold monies in wallets and do whatever they have been doing without disclosing who they actually are.
One more follow-up question to this DAO question. What I've heard just recently is that even if the project might be anonymous, if it's a DAO that is not registered as a foundation anywhere, that actually the DAO participants, that anyone who votes in the DAO could actually be legally viable for the decisions they make. So even if you're not a project founder or operator, that you are actually personally liable if you vote in a DAO that doesn't have a legal foundation somewhere. Is that correct?
Yes, that is absolutely correct. And L has answered your query as well. This is correct.
Okay, so this is something maybe just for the viewers to really be aware of, that it's not just the legal benefit if something is a DAO and completely anonymous. It's actually that every single individual that interacts with it now is in danger of being legally viable. It's a very big red flag. I mean, we cannot say it more strongly if something is completely anonymous. So yeah, Ilya, please.
Yeah, thank you, Mark. Hi, Sahil again. Thank you for joining us today. I just want to elaborate a little bit more on this topic about difference between security and utility model. I mean, here, do authorities already have some special and clear standards, like being sold through ICO, which are security, obviously, or being mined or airdropped, which cannot logically be security? And I mean, is there a clear practice currently what founders should do and what shouldn't do in order to comply with these requirements?
Yeah, so when it comes to the US, it is slightly tricky because in the US, even the utility tokens, considering that they come up with an expectation of profit, going by the Howey test, expectation of profit in itself would render the nature of a token to be a security. Most likely, yes, there are other prongs as well, but if one prong is satisfied, then it becomes very easy for a lawyer or for someone else to satisfy other prongs as well. But when it comes to other jurisdictions, for example, let's talk about Singapore. So in Singapore, you have to ensure that the tokens which you are issuing or the underlying transactions under the token do not fall under the regime of Securities and Future Act, SFA. And Securities and Future Act has clear-cut defined that what exactly are securities in Singapore. Now there is another legislation as well, so which is PSA, and under PSA you have to ensure that your token is not amounting to a digital payment token. If it is amounting to, then you are required to obtain an authorization. But otherwise, generally speaking, there is a clear-cut criteria of security in each and every jurisdiction. You have to ensure that you are steering away from that particular criteria in that jurisdiction. In Singapore, something may be considered as a security, but the same token would not be considered as a security in Thailand. And all the authorities in these major jurisdictions, they have been issuing clarifications on it. Whether we talk about FINMA, whether we talk about the Swiss authorities, whether we talk about VARA in the UAE, whether we talk about MAS in Singapore, all the authorities, they have come up with their clarifications on what kind of tokens are going to be considered as security tokens. So if a founder is trying to launch a token, the founder should be considering a particular analysis that which jurisdiction would be the best for me to launch the token from all perspectives. First perspective is whether my token would be considered as a security or as utility in that jurisdiction. Number two, what would be the taxation implications there? Number three, would I be required to obtain any kind of licensing or approvals to do token sale or token issuance? As an example, Estonia. In Estonia, it was very easy to launch tokens, sell tokens, and take all the proceeds. But since last year, Estonia has also put regulations in place.
Thank you very much.
Yeah, got it. Absolutely clear. Thank you, Sahil.
Dan?
Something that just came to mind here, because we're talking about anonymous teams. What are your thoughts on China, where obviously there's a lot of crypto projects that get generated from there? We just looked at one recently that I think has a big Chinese backing. They certainly don't give a damn about the US SEC and what's going on. Are there other places that, it is still a Wild West and you don't need to be as concerned?
Let me give you an example from old days when blockchain and crypto were not a buzzword. All of us know that there are certain jurisdictions where it becomes very difficult to enforce your intellectual property. There would be all kind of counterfeit goods. There would be duplicacies. There would be trademark infringement. So there are certain jurisdictions where it becomes very difficult to enforce. For instance, let's say there is a very famous smartphone company which is not based out of China. But some of the shops in China and some of the manufacturers in China might be producing counterfeiting goods and selling them. If it were any other jurisdiction, it would be very easy for that company, let's say, which is based out of the US, to go and get its rights enforced before a court of law. But jurisdictions such as, I don't want to name, unfortunately, because sometimes we have to handle legal matters of those jurisdictions as well. So there are certain jurisdictions where the legal regime, even though is clear-cut, but practical difficulties in enforcement becomes an issue. So what you are talking about from the perspective of crypto and blockchain projects, Daniel, there are certain more legal matters as well, intellectual property. It becomes very difficult to enforce that in, let's say, for example, Russia or China. If a Russian company or a Chinese company or a Taiwanese company is infringing your trademark, you can try suing them in their respective country. And unfortunately, that will become a protracted and never-ending legal battle, which will not yield positive results for you. So the same concept applies to blockchain and crypto ventures, unfortunately, coming out of these jurisdictions.
Yeah, thank you. I'm actually not sure if I have a question, but more also I want to expand on the answer a little bit for Dan, what I know about Cyrator as well, and also how analysts have to look at this. What I was told is that with Cyrator, let's say we are incorporated in Hong Kong or something, or in the BVI even, but if we can, the SEC in the US or also the European Union can come after us if we don't do things the right way, and they can shut down access to our website in the EU and in Europe, in the US, for example. So I think from the perspective of an analyst, when they look at our product, they need to see, do these services does Cyrator or do these services need to function in the West or in Singapore or wherever they need to be, right? And if they do need to function there, then they also need to be legally compliant there, right? Because otherwise the business will collapse and therefore the token will collapse. If you have a project that is fine, if it's just in China, for example, and only used there and it's only compliant there, then as an investment, it's probably fine. So I guess my question is, what is it that you really have to look for? Do you have to look for what the business is, where it runs, and therefore which jurisdictions it is, and if it all matches up? What does the analyst have to look at?
Yeah, if everything is matching up, then you have to see that in which all jurisdictions, and now I'm talking from a legal perspective, and I do understand that not every analyst would be going into this level of detail or this level of analysis because of paucity of time and limited availability of data. So one of the core things is token is, let's say, structured or being issued from a country where it is being considered as a utility token. So green flag. Secondly, it is being compliant with the laws of the jurisdiction where it is incorporated and from where it is being issued. Checkbox. Now, when it is being released or it is being sold to certain jurisdictions, is it compliant with those jurisdictions as well? And I'll tell you, most genuine projects will always have a jurisdictional legend in their white paper, or sometimes information memorandum or information document or pitch deck stating that, okay, if you are based out of Hong Kong, then you must be fulfilling this criteria to buy our token. Or if you are based out of the US, then you must be fulfilling this criteria to buy our token. Or if you are based in the US, then you cannot buy our token. So all these jurisdiction legends would be there. For instance, in Saudi Arabia, they will be saying that, okay, you cannot buy our token if our token is considered as a security unless it is being issued or it is being resold through a broker which is registered with Capital Market Authority of Saudi Arabia. So they have to comply with laws of those jurisdictions as well where they are selling securities or where they are selling tokens.
Thank you very much. Ilya, please go ahead.
Yeah, again, just quickly jumping. Sahil, I just want to make it clear about this difference between security and utility regarding, let's say, the majority of authorities. So let's say if a token was sold in different ways, was sold to investors, it can be considered like a security in most of authorities, right? But if the token was mined or was airdropped, in other words, as a gift for a user, it can be considered as an utility, right? So there is no problem with mining tokens, airdrop tokens, because it's quite popular topic right now across top blockchains, including Arbitrum, for example, you know.
Yeah, so coming to your question, yes, minting of a token may or may not. I wouldn't say that it doesn't qualify the test of security. It may qualify as well, depending upon how the token is supposed to function. Because even if you are giving a particular token as airdrop to someone, and that token is security token, then in essence, you are granting security to that particular individual. In that case, as per the security laws, you should be asking the individual that can we drop this particular token to your wallet or not? Because if you are doing it blindly without obtaining user's consent, then, and if it is a security token, then it will be a violation of securities laws as well.
Yeah, got it. Just let me give you an example. A governance model token, right? It's pretty popular right now. Should governance token be considered as a utility, as a pure utility token? If it has only a governance utility, you can vote on different further development of platform, etc.
Yeah, again, you know, I can see where you're coming from. And in some jurisdictions, what you are saying would be necessarily true, but not in others, because by using a governance token, by casting your vote, you are actually taking part in the management. So this token entitles you to make decisions or to vote or to participate in management of that particular venture or how the token is functioning. So even governance token may be considered as a security token in some other jurisdictions. Not all, but yes, it will definitely be in some.
Thank you. Thank you so much.
Yeah, maybe Jordi, why don't you go first, please?
Yeah, thanks. Does this also count for NFTs and things like that? Like NFTs, do they also count as tokens, or can you build a setup with NFTs where it's less likely to get caught in regulations?
Unfortunately, Lordo, the answer remains the same. And I'm sure that you might have read about what happened to tokens which were issued under the name of Beyonce. And those NFTs were considered as security. So yes, NFTs are treated at par with tokens. and the nature of NFT may or may not be security.
Yeah, thanks very much. So I think what I'm hearing from you is that it's really the line between utility token and security token is very murky. And it's basically not really possible to, other than the Howey test, right, which is maybe almost the clearest thing that we've heard today, at least. It's very hard to distinguish. But from what I understand and why it was such a big flag for me when I looked at this game is it depends a lot also on the scale of how you, so even if it is a security token, if you don't advertise it publicly and you only sell it to less than 50 people, right? And maybe those 50 people, you also make sure that they are, accredited investors and everything, then you're not really in danger of breaking laws very heavily, right? I mean, the reason I flagged this so much is because I believed, at least according to the Howey test in the US, this expectation of growth makes it a clear security. And then advertising it publicly is completely is very, very illegal, right? Advertising security publicly and selling it to thousands of people and raising millions of dollars, it's like crossing many lines on the SEC's list, basically. So just to add to that, from what I heard is, even if you equate these security tokens to just regular equity, right? You create a company and you have 1,000 shares or whatever, you can then go and sell these shares. In Switzerland, for example, I think it's up to 50 people and up to a certain amount, and those people need to have certain qualifications. If I would have regular shares, not a token, right? Regular shares, and I would now start selling them to thousands of people and advertise it in the newspaper, I would basically be breaking these same laws as I do if I create a token and advertise it publicly. And that's why, for me, that was such a big flag. It's like you're doing something, even if you're not doing tokens, even if these were shares, you would have the same legal issues.
Absolutely, Mark. And just to take the conversation forward, see, first of all, when it comes to the distinction between security and utility, most of the jurisdictions, they have a clear-cut criteria. For example, in Singapore, Monetary Authority of Singapore has launched a white paper. It has issued clarifications and directions that your token will be considered as security only if it is fulfilling this criteria. So I wouldn't say that it is very difficult to ascertain the distinction between a security token and utility token. Point one. My second submission is that even if someone wants to go for security token, and people should definitely be doing that, because security token offering has the potential to be an alternative to, let's say, an initial public offer or restricted public offer, provided that it is done in a legally compliant way. This is why if a founder or if a particular project wishes to launch tokens which are falling in the regime of security, do it in a proper way and it will yield ultimate returns. Ultimate returns in the sense that if you are doing a restrictive sale, for example, in Singapore, there is a particular criteria that number of investors should not be higher than this much. You should not be raising more than this much. These are called small offer criteria. These are also called private placement criteria, qualified investor criteria in all the jurisdictions. So you can raise up to a particular limit. But if you want to raise from public at large, then you should consider either using one of the ways in which, let's say, SPACs, or you think of going for IPOs, or alternatively, you end up collaborating with some new age exchange, such as Gibraltar Stock Exchange and other avenues. So this is how they can do this. Security token offerings is a very good avenue. It's just that it should be structured properly. Issues arise where a token is security, and unfortunately, founders, they want to cut costs. So, legal, regulatory, and compliance criteria, and they end up garbing it as utility token.
Just a quick follow-up on this. That's why, for me, when this website advertised publicly that it's selling its token on its website, that, I mean, in most jurisdictions, that will not be allowed, right?
Absolutely.
So that is a correct, that I can continue looking, because that's something maybe also, that's some very specific guideline we can give analysts. Sorry, if they advertise, if they say that, hey, you can buy your tokens, and it clicks, and then you go to a third party, a launchpad or something like that, that still doesn't matter, right? As soon as they publicly advertise that this token can be sold, that is a problem in most jurisdictions, correct?
If it is a third party launchpad, which is a registered security broker dealer or a platform, then in that case, it shouldn't be an issue because that platform's liability or obligation would come into picture there.
Okay.
But if that platform is not regulated, then it's a very huge issue.
In your experience, these platforms most of them are well regulated?
Unregulated, unfortunately.
Okay, so actually on Curator, we should start setting up a list of properly set up launch pads that are properly regulated. That would be
Yes, there actually are a few names which are doing this.
okay. Great. So maybe we can put that up together later and make that a resource for analysts.
Absolutely.
Right, that would be fantastic. Thank you.
Absolutely.
Dan.
Yeah, thank you. You led in perfectly into this because I wanted to ask you not so much if we were going to differentiate what's a security and what's a utility, but let's just, for the sake, assume that it's a security. And I want to throw out a couple business use cases and get your opinion on that. What's very popular, and the first one, is a syndicated group. So what do you do when there's a party, let's call them party A, that engages with the project to buy the tokens, signs a legitimate SAF, goes through a legitimate KYC, and they buy a bunch of tokens. Now, that has checked the box for the project, and they get resold on a second level to a syndication of hundreds of micro investors who may not be KYC. So let me throw up the second one, and then you can answer both of them. So that would be scenario A business case. What are your thoughts on that? And the second one is a stealth project here locally. I think it's interesting because I'd like to maybe invite Kyle to come on here and talk about this, Kyle Chase. He has got a project called Uncommon Wealth that is stealth launching right now. And what he's doing is he is a VC. He owns Master Ventures, and he is going not Master Ventures, but a similar VC that's accredited will invest in all of these projects. And as a holder of an NFT, kind of tying in Jordy's question, I can now put stable dollars into a pool towards this project. I will never actually receive the token from that project. The Uncommon Wealth team will sell these tokens and return to me stable dollar. So I never touch the underlying security, which is undoubtedly a security, but you've got the party that's going to buy it legitimately is going to buy it with my money as a contributor and then sell it and then pay me back my return on investment. So in those two scenarios, if you can remember them both, what are your thoughts on the legality of those business case structures?
Sure, definitely. I'll start with the first one. You're absolutely right. And sometimes we have seen this thing happening, that a lot of investors would do KYC on behalf of only one investor and then later on distribute the tokens to themselves. So that's why there are certain restrictions now on transfer of security tokens, that KYC must be in place for secondary sales as well, especially when it comes to Singapore and the US. It has become a norm there. So jurisdictions are trying to catch up with this loophole or with this particular notion. And in most of the soft, Daniel, you might have noticed that the issuers are putting a stipulation stating that the buyer is buying for its own account and is not acting as a nominee, beneficiary, or trustee to hold these tokens for anyone else, for a third party. That is the first one. When it comes to the second part, that's a very interesting proposition. So I have one question here, and that is, are you entering into any kind of agreement with this gentleman or with the organization, which stipulates that you would be contributing this much investment and you would be entitled to these many returns?
The thing is, there were a certain number of NFTs that were released, and that entitles you to a certain percentage of the earnings of the effort of this organization. But then there's also the ability, if you hold these, that you could contribute besides that to additional opportunities to earn money. But essentially, I guess what they've sold is, I think 12% or 15% of the company is going to go to all the NFT holders and all of the returnings from them basically being a venture capital. And it's an interesting model. I'm just wondering legality of it, and it'd be very interesting to have them come in here and go head to head here and talk about it, I think.
I mean, absolutely, this is a legal model provided that all the legal requirements are adhered to. For example, if NFT holders are going to be entitled to an underlying share in the company or underlying security, that makes the nature of NFT as security. And I'm sure that this gentleman coming from venture capital industry would be knowing it better. And I'm sure that he is Well, at least I'm hoping that he is complying with all these regulations, because the regulations in terms of securities are no less than, are almost similar to how they apply to VC funds. And Lordo has actually asked you a very interesting question.
Yeah, I think, let me just pull that up. KYC to return. No, there's no KYC on it. You basically mint the NFT and you've got it. And their whole premise is that it's uncommon wealth, so it's like Common Street. They're trying to come up with a mechanism that's legal so that all of the individual micro investors that can't invest in these securities because of needing to be accredited investors can skirt that in a legal way. And I'm just wondering, have they done it? Is this the magic formula to partake in this without worrying about all of these legal traffics?
I mean, we have seen investment DAOs also coming into picture, which are following the same model as this gentleman. So this is absolutely fine. They would be conducting KYC on you one day or the other, that's for sure. Either they'll do it themselves or they'll ask you to sell or receive NFT or receive funds through a particular platform which will conduct KYC on you. So that is bound to happen.
Okay, yeah, thank you very much. I think we're almost done now, and I would like to circle back to the game that we talked about in the beginning. So while we were talking, I looked at it again, and so they do sell the tokens on the launchpad, they say, but if we click on it, I don't see that this is, I mean, the website is just, it's like on their own, basically, and all I can do here is connect the wallet and swap tokens immediately. So this does not look to me in any way like this is being done by a registered third party, basically.
You see that small copy that they have underneath of that contribution? You're agreeing to their terms and conditions, blah, blah, blah. I know that's the flimsy checkbox I was talking about. Sometimes they, obviously it doesn't cover them, but you know, they're saying, hey, I bet you in that legal notice, you're not allowed to buy it if you're a US citizen, but they're not enforcing it.
But from what I understood now from Sahil is that in most jurisdictions, what they are doing, selling a security publicly, would have to be done through some kind of agent, right?
Right.
And by doing it themselves, they're clearly not a registered agent. So that would make it, in most jurisdictions, an issue. Is that correct?
Yes, Mark, that's absolutely correct. But there is another way for them to sell securities.
Yeah.
First way definitely is to sell through a registered broker dealer or licensed broker dealer in that particular jurisdiction.
Yeah.
Second one is to apply for a license or to apply for a permission to sell or issue tokens or securities from the market regulator. Let's say that you do in the US, you do a Reg D or Reg S filing.
Yeah.
In Singapore, you file a prospectus with Monetary Authority of Singapore. That's how you do it. Or alternatively, you rely on those particular exceptions.
How likely is it that they have done this, that they have this license?
Their terms should be mentioning a few things, their legal notice and their white paper. These would be the three things I would rely my analysis on when reviewing a project from a legal perspective.
You've mentioned, I've asked this to you before, and you've mentioned there would be very significant costs involved in getting such a license in most jurisdictions. Is that correct?
It depends from jurisdiction to jurisdiction, as well as it depends on the quantum of investment as well. For instance, if you are raising a particular limit, I believe it's 5 million or 6 million in Singapore, then you don't need any kind of licensing in Singapore.
Okay.
Similarly, if you are doing it in Switzerland, then there is a particular minimum threshold. Beyond that,
millions?
you have to file prospectus. I can't remember the figure on top of my head, but there is. Just give me 1 second. I had prepared a document, so I can actually tell it to you right away.
I just want to point out that I was told that in Singapore, there's actually companies that you can go through that take like 10% of your raise that make this legal, that you piggyback on their license.
I mean, if they say here they're raising 1.3 million, right? Then actually what you're saying, if it was in Singapore, then this would all be completely fine. They wouldn't need a license.
Based on what Sahil's comments were, yes. And then I also think, additionally, from some of the research I did, they could be using one of the many companies there that act kind of like a PayPal, right? You want to accept payments on your website for a product, you use them and they take a cut of the action, and it makes it legal. So that's in Singapore. I don't know about
Marshall Island has a special DAO registration option, and that allows them to create a certain LLC registration that's slightly altered.
restricted territories. There you go.
Yeah, but they follow the US in their laws.
Oh, it doesn't say where they are.
Go ahead, Sahil.
Okay. But yeah, just to finish it, I would like to understand if I was right or wrong about this, because if I'm wrong, then I have to go back and change my review and answer some comments.
Mark, my preliminary thoughts are that I incline to agree with your findings, but I'll have a detailed look at their white paper and get back to you.
Okay. So, but because let me show you my review. You can see here my review is 1 star because of that. And I basically say, I'm not really a gamer. I cannot judge the product. But because of these 2 red flags that I point out here, I think that as soon as they become big enough, they will be taken down by the SEC for selling tokens in this way. And that's why I give it a 1 star. From what I hear from you now, I maybe should give it 2 or 3 star because I only think that's going to be a problem, and it would actually require quite a bit more deeper legal analysis before I can make that call more confidently.
Yeah, that's right.
Okay, good.
That actually takes me to the next very crucial legal component, and that is data protection and data privacy. We can do it during the next session.
I would love to have another session. And I mean, everyone has expressed a lot of interest. And I think if I am right about this game, then you can quite easily quickly tell, hey, looks like a very big flag, right? That's something that would be great if we can teach people. Those are simple things you can look for to at least be more cautious. If we can give people checklists like that could be very powerful.
Absolutely.
So then, Sahil, if you want to leave any final notes, then anything you want to say?
First of all, thanks to you, Mark, for inviting me. And thanks a lot to Daniel, Ella, and Lordo for coming up with their pearls of wisdom. It was very interesting interacting with all of you, and I hope that we are able to interact more. Looking forward to working closely with all of you.
Great. Thank you so much. Thanks, everyone, for being here. Thank you so much.